Hello and welcome to episode 2 of the Just Covered podcast. We invite you to relax and grab a coffee and have listened to us where we talk to some guests around their views and opinions in the intermediary arena. My name's Wayne Holcomb from Legal & General.
And I'm Hazel Johnston, and today we're speaking to Priyesh from Ablestoke Financial Planning. So welcome, Priyesh. Thank you for coming in.
Thank you for having me.
Yeah, no, we're excited to speak to you because you were recently part of our kind of protection success stories, where we looked at lots of sellers and lots of advisors across the market, and we looked at who was really great at kind of getting protection into the conversation. So thank you, first of all, for being part of that. How did you find it?
Yeah, it was interesting. It was enjoyable. Just giving my perspective on how things work in the protection world and how it fits into financial planning in general.
Yeah, no, it was great. You give us great insights. And I think today we'd love to hear more from you just about your experience and your time as a kind of financial consultant and what that means to you. So Wayne, do you want to get us started?
Yeah, so Priyesh, talking about the current cost of living crisis, the economy, the headwinds that are happening coming into next year. How are you sort of introducing protection into the conversation, and how are clients receiving that at the moment?
So it varies from client to client because everyone's affected by what's happening in the economy in a different way. So you really just have to be sensitive and aware of the fact as to how individuals are affected by what's happening. And you have to really go deeper into the state of the economy, but what were the triggers and instigators to get it to where it was now? So the starting trigger point was originally COVID. That may have meant people were feeling more vulnerable. People come to the realization that anything can happen health-wise at any time, and people are more receptive at that point in time to protection. At the same time, that then led, following the COVID pandemic, you had the war. Followed by the war, you had high rates of inflation. That's then led to interest rates going up. So each individual client is affected in different ways and feel vulnerable for different reasons. Some of them would have experienced vulnerability because they've experienced people passing away. Every single client you speak to knows someone who's had the worst effect of COVID. A lot of people have suffered from COVID, but each client would have known someone that's had a fatality. So that makes them feel more vulnerable. Then you've got people who are suffering from high inflation, the cost of living, seeing their mortgage go up. That makes them realize, whereas where they previously felt very comfortable with their financial situation, with one turn of events, all of a sudden you're not feeling very comfortable. And it brings to the forefront of your attention, what if my income wasn't there? I'm just suffering from the cost of living. That's increasing my bills by X percentage points. If I lose my income, then what happens? So it's completely changed people's perspective.
So you're saying it's the ease of introducing the actual prospect of protection and covering their portfolios, their financial plans in future is a little easier, would you say?
I'd say so, because I think when things are going well, the economy's booming, people feel more comfortable. They've almost got a false sense of security. When there's a pandemic and there's a war and high inflation and high interest rates, people don't feel as comfortable. And that heightens their sense of awareness and brings their financial planning to the forefront of their attention, which is actually a positive thing, because if they start creating the right habits as to what they should be doing with their money now, that will just hold them in good stead going forward. Because the pandemic, the war, these things are temporary. Financial planning is something you do lifelong.
Absolutely. It's like, well, we were saying earlier, weren't we, Priyesh, when we chatted, it's when you go on TikTok, you can't, or any social media, you can't escape videos of people worried about giving loved ones presents or for Christmas, or their energy bill costs, and that's just with a couple of extra £100 a month. So actually, yeah, as you said, if their income's completely wiped and they struggle with this extra £100 to find a month, then they're really in quite a, as you said, vulnerable position, aren't they? But how would you find that, from a wealth space? Have you got many clients talking about this yet, or not really?
Even from a wealth space, people come at it from a different angle. From the wealth perspective, it's an opportunity and an easy opportunity for people to accumulate wealth during this period, as long as they can hold on to their investments, because everyone understands that if you buy low and you sell high, that's when you make money. Now, that's easier said than done, because in reality, everyone understands you buy low and sell high. But when are the markets low? It's when something dramatic has happened to lead to those markets falling. And then it's really a true test of, you understand the principle of buying low and selling high, but do you actually feel comfortable doing it when it's actually happening? There is a good opportunity out there for people to invest. It's just how comfortable and reassured people feel going into that space, because you've really got to look at things from a 5-year horizon when you're investing. And actually people look at protection from a different way as well when they've got wealth. I think at the moment, with everything that's going on, people realize that the wealth doesn't insulate you from everything. And therefore you do have to have protection, not just to protect yourself, but also to protect your wealth, which is designed to give you better comforts in life.
Yeah, I love that. Not just protect yourself, to protect your wealth. That could be, that's a great phrase.
It's a strapline and a half,
yeah,
isn't
I
it?
love that.
It's something people forget, because people make the
Yeah.
assumption that I'm protecting myself so that I always have money. And when people do have a certain degree of wealth, that creates a false sense of security that you're comfortable, when actually the purpose of building up and accumulating the wealth in the first place was designed around creating better life choices. And if something cataclysmic happens, it removes those life choices. Whereas if you have protection in place, it protects your wealth and therefore protects your life choices. So that's really important for people to understand. And I think with the current economic climate the way it is, it helps people to realize that.
That's a brilliant insight. So tell me, Priyesh, what do you think is the best point in the sales process, in the interaction with clients, to actually talk about protection?
I think at outset, people have to understand that it's the foundation of financial planning. Because for most, there are those that have already accumulated their wealth and are towards the end of their career. For them, protection might not be such a priority for themselves. They might be taking out protection policies to protect others. People who are at the earlier stages of their career, what they have to realize is the wealth they're creating and they're building, all of that stems 100% from their ability to earn that income before they can accumulate and build the wealth. So once people have got their head around that, they realize that the biggest asset they have is their income. It's not the money they've got in their bank that they've saved over the last few months or years, because that can go in a heartbeat. Even if you're saving 10% of your income every day from the day you start working for the first 5 years of your career, how long would it take to spend that money if something went wrong? And therefore, the underpinning of your financial planning is always the protection. So I'd say in the first conversation, I'm drawing it to people's attention. And also, I have to do that, not just because the FCA prescribes that you have to talk about protection first, but also from a client's perspective. If I'm putting the client's best interests at heart, as soon as they leave, not so much now, in years gone by, they'd be physically in the office and we'd be meeting people. Now it's all over Microsoft Teams. I don't know what's going to happen tomorrow, because I've actually sat in meetings with clients on a Friday night. This has actually happened where we've spoken about protection. It's a Friday night. We're both eager to get away and enjoy our weekends. And the clients had an epileptic fit over the weekend that they never had before. Now, the conversation we had about protection was, you need this. It was my opinion that they were in need of protection. They agreed to take out the protection, but because it was late on a Friday evening, they were eager to get away, as was I, and we agreed that we would do a protection application the following week. Having had that fit over the weekend, that was no longer possible. Now, fortunately, that wasn't a brand new client, so they already had insurance in place that I had set up. The conversation was about, you need more because now you're earning more. So it wasn't as bad as it would have been, but that brought to the forefront of my mind that I don't know what's going to happen to someone after I've stopped speaking to them. So I have to bring that conversation up as early as possible. If they want to decline having the conversation at that point in time, that's their choice. But it's my responsibility and duty to bring it to the forefront of their attention. I can't take that lightly anymore.
Yeah, I was saying, I agree. Like when I was giving advice myself, like in mortgages, the way that I saw it is like they were only sat in front of me because they had an income. I could only do my job if their income was still there. So like I couldn't better their life by helping them fund a new home if that income stops. And I guess I resonate with what you were saying. Like you can't improve their wealth, improve their life, grow their asset if actually that income isn't there in the first place. So I love that concept, and that sounds really simple when you put it into place like that.
I'm interested in that particular scenario. Those clients, life happened to them over that weekend, didn't it? But often you're talking to clients where it's not happened to them because obviously it's before, and you just mentioned that. So how do you paint those pictures? How do you do that to ensure that the customers are aware of the importance?
Yeah, so earlier on in my career, I was painting the picture that I hadn't experienced, if that meant sense. So I was talking a client through a journey of what could happen. But being in the industry for over 15 years now, unfortunately, it's inevitable that if you've been selling protection for 15 years and you continue to do so, over time you're going to get more and more claims. So unfortunately, I've sadly had death claims and critical illness cover claims for income protection. So now what I do is actually, rather than paint the picture of something that hasn't happened but may happen, I'm painting the picture based on what has happened to a client. Because I've had clients pass away and suffer critical illnesses and have to claim income protection, when I'm sitting with a client, funnily enough, I've probably got a client who suffered what they could suffer. So I can actually just tell them the story of, I've got a client in your peer group, this is what happened, this is what their life is now going to be like. And fortunately, because these clients have had protection, otherwise the claim conversation would not have occurred, I've been able to explain to people who haven't got protection, this is what happened, this is now the client situation with protection. Had they not had that protection, if you were them, what would have happened? And that, because I really have to drive home and put them in that position, although it's an uncomfortable conversation to have, you don't like painting that type of picture to someone, but it's irresponsible not to. Because if I don't place that client in that position when nothing's happened, they're going to face the reality of the situation without the resources to meet it.
Yeah. And you mentioned earlier, you like the clients to see their income as an asset, and like actually that is something worth protecting, that asset. How do you do that? How do you get them to really visualize that their income is an asset?
There's a couple of ways. So it's evolved over the years, because in my earlier stages of my career, prior to COVID, I was always meeting people face to face. Now it's more over Microsoft Teams. But what I try to get across to the client is your income comes into you every month from the employer. But I get them to visualize having access to a machine where you're pressing a button. Every month you press that button and your salary comes out of the machine. Now imagine I come over and I say, you're going to press this button, every month money is going to come out of the machine, but you have to give me a couple of percentage points of what's come out of that machine. And I promise you'll always continue to receive that income. Would you pay to insure the button or not? And what would you call the person who doesn't pay to insure that button? Because you are your biggest asset. And I also get clients to think it through. If you think about all the assets you own, for people in London, biggest asset is probably their home, which could be anything between £500,000 to £1 million. Their income, by definition, will be a quarter of that, because they would have had to have had that to be able to obtain the mortgage. Their biggest asset is their ability to work and earn over a 25-year time frame. So if you take someone, for instance, who's earning a £50,000 salary, just to keep the math simple, if you multiply that over the course of their working career, that's £1 million. So if I'm saying to the client, if I'm looking at this purely as a business, your ability to work is worth £1 million. How much would you pay to protect that £1 million, considering you pay buildings and contents insurance to protect theft in your home? What's the most expensive item you have in your home? You protect your car because you have to. But your biggest asset is your ability to earn, and you don't protect that. So you're effectively consciously deciding that you're going to press that button and income's going to come out, but you're choosing not to protect that button, knowing it could break at any time. And that's, when you put it into perspective like that, it usually sinks in and people make the right decision. And if not, then I've got because I don't like to paint horrible pictures about what could happen. But if people don't understand the logic of why they need protection, I've got no choice but to paint that horrible picture, not because I like to do it, but because I want the client to make a conscious decision of not taking out protection, which I'm perfectly comfortable with. If a client decides they don't need income protection, they don't need critical illness cover, I'm comfortable with that as long as it was a conscious decision.
So what you're saying is you're trying to make sure the customer's got ultimate awareness, the most heightened awareness they can have around to that choice to make protection, to buy that protection or not.
Correct. It's my duty to heighten the client's sense of awareness, and that they're making the decision with a heightened sense of awareness.
Yeah, I mean, with the Consumer Duty coming along next year as well, that's really, really important for everyone, isn't it? For everyone in the industry, including us as product providers.
I guess that forces the issue, doesn't it? Which is positive. I guess that should have always been the default position, but perhaps it wasn't. And now maybe the Consumer Duty is going to force that conversation, which should have always been had anyway, in my opinion.
It's interesting, isn't it? Because you say you can have that conversation so they've got that ability to make that informed decision. I think within the industry, with protection, people can't test drive a life insurance or critical illness cover or income protection until it's too late. So they haven't got that. It hasn't got that tangibility factor, has it? So the importance of you having those conversations, and your peers as well, that are all out there doing it, because I'm sure there's lots like you out there. It's just great to share those ideas and the way you do it. Are there any other hints and tips that you use with regards to, just general tips with regards to the protection around the conversation, and any other ways that you work?
I'd actually just like to go back a point there, because you made a very good point, because you were talking about life insurance and critical illness cover and income protection. And actually I guess this dovetails into a tip. I never like to play God and know what insurance someone is going to claim on. Now, the most important insurance anyone can have is the one they claim on. But I don't know if someone's going to claim on their car insurance, their phone insurance, their life insurance, their critical illness cover, or their income protection. So I look at it from the perspective of which insurance is going to have the most impact. So if I remove from that equation phone insurance or car insurance, maybe not car insurance because it's illegal not to have it, but if you take the contents insurance or phone insurance, the impact of someone losing their phone or something in their home, it's replaceable. And the impact of losing an income or death or suffering a critical illness, that's not readily replaceable. And I don't know which product someone's going to claim on. So I always want to be in the position where actually what is going to affect the client most. So if it's someone who's single, who doesn't have children, then it's probably income protection and critical illness cover that's going to affect their life. But even when they have a family, if someone's the sole breadwinner in their family, not having an income or being critically ill is almost worse than being dead. But the most common insurance that people are aware about is life insurance. So everyone knows that when you have children, you have to have life insurance. Because if you're not around, who's going to raise your children? People are also aware of it when they have a mortgage, because if you've bought a house as a couple, you want to make sure your spouse is free of a mortgage or only has a mortgage that's affordable to them. But you're less aware of it when you don't have children or you don't have a mortgage. But it's equally as important. So it's just making people aware of what's available.
Definitely. And I loved when, we were chatting, we've chatted previously in the Protection Sellers Research. You mentioned that you talk a lot about your duty and actually making sure that you've done the right thing. And one thing I'll never forget you mentioning is you feel that because you can't predict what will happen to someone, you did say that you can't put a cap on how much they may need either in terms of insurance. Can you expand on that at all for our listeners?
So my mindset slightly changed towards that after I experienced going through the claims process with the first client that I ever had making a claim. So when I joined the industry, rightly or wrongly, my attitude to protection was, yes, you must have protection. Having something is better than nothing. So in my mind, it was almost that if I'm sat across the table with the client and they don't have protection, and I've explained to them why they should have protection and they decide to take it out, that's a positive straight away. And it is, because they have some protection. But then people would often prompt me from a client's point of view, how much protection should I have? And I would influence that to some degree based on what I think they should have versus what their budget is, and that would influence my thought process in influencing them unknowingly as to how much they should have. After I had my first claim go through, the client was actually very happy with the claim, that the money they received from the payout, because they felt it was enough. In the back of my mind, I thought maybe you could have had more, because you could have afforded to have more, and because they had insurance. I'd put the policy in place for them years before they claimed. I couldn't remember how we had the conversation or how we chose the amounts, and although we have letters to detail what we spoke about and what level they chose to have and why, I can't remember the exact conversation.
It feels awful, doesn't it?
So,
When I got my first claim as a mortgage advisor, I felt the exact same. I was like frantically looking through all my paperwork, and although I could see what I'd put in place and like my reason why, you still want to think, well, was it robust enough? Like, was it enough? And I remember grabbing like the fact find paperwork, and that was my first port of call, saying, please tell me I've put something in place for this person. And then you go to, please tell me it's enough. And then you go to, I hope this gets them through what they want. Sorry for interrupting, but I felt the exact same as you in that moment when I had my first claim as well.
What you're saying resonates with me, because the first thing I did was think, what was the deferred period on the income protection? Is it the same as what he just told me his sick pay was? Did he change jobs from when we set the policy up and now? Or has something changed? As you've mentioned, frantically going through the suitability, what they've got, how much they've got. And then I'd made a conscious decision that I never want to be in a position where I haven't had the conversation with the client about protection a couple of times over, in that was a trigger point for me, where I contacted all the clients I had that I'd put protection in place for, to talk them through what had happened to my client, to talk them through what they had. Half of those clients said, if I was in that client's position, I would be absolutely fine. I've got enough. And that was reassuring for me. But there was a percentage of clients who said, well, actually, now that you've explained that, I'm not sure that I have enough. But I wanted to have that conversation. And now when I talk about protection, I influence the client in respect of I'm explaining why they need insurance. But I try not to influence them as to what level of insurance they need. In fact, it's the opposite in terms of when they tell me what they think they need, I'm probably then from that position, trying to push them to have a little bit more, if I think they haven't selected the right amount. But the starting point is they've told me what they need, and then I'm coming in at whether that's enough or not enough.
Absolutely. So you're not almost shutting it off at a level before they've even established that level themselves.
Correct, because they have to live with the consequences of the decisions they made, not me. And therefore, it's only just that they make the decision without my influence initially, and my influence only comes into play if I feel they've made the wrong decision.
That's brilliant. And it's a real, true, interactive and collaborative way of financial planning, isn't it? And we spoke previously around sort of goal-based financial planning and the fact, effectively you're advising customers on their lifestyles, aren't they? Where they're going to end up later in life. I think you mentioned earlier it's a whole career, getting people to retirement and stuff. How do they react when you talk about the impact on those goals in the event of not having any protection in place?
It varies from client to client. I would say those that have had experiences in their life, based on everyone knows someone who's suffered from cancer or a heart attack or stroke. When it's closer to home, then a client's probably more receptive to the conversation. Or when they have family or liabilities, they're more sensitive to it. Those clients who perhaps are a bit younger and therefore they haven't got friends and family around them who are suffering from cancers and heart attacks and strokes. They don't have kids, they don't have a mortgage, and they're probably less alive to it. And it's to them that you're probably having to turn up the volume more on why it's a necessity.
And how do you help them to prioritise? Because you might have a new client that comes in that's fairly young. They might have some spare budget, whereby they could be looking at a regular savings need as well, but then obviously there's a protection need at the same time. So how do you help them to prioritise those different areas?
Back to your point, which is it's all driven around the goals. So for a lot of clients, they have lots of goals, and it's our job to help them achieve those goals. Is bringing to the forefront of their attention that all of their goals are 9 times out of 10, their goals are hinged around their ability to save and invest and put provisions in place to obtain those goals. Something as simple as buying a house or getting married and having a family. A deposit, a fund, an investment has to be built up before you can then buy a house. But that deposit, that investment was coming and being driven by the money you're able to save. The money you're able to save is only available to save if you have an income. And if the income's taken away, what goals are now possible? What lifestyle is now possible?
And how are you finding younger clients now? You're finding they're a bit more financially astute than they did back in the day when you started I think you started your firm up in 2009, was it not?
Yes. So I've been in the industry since 2006, but we founded Ablestoke in 2009. So being in the industry for 15 years, I think the difference now is people have more access to information, which actually is a dangerous thing. Because when I started out in the industry, although we had the internet, people were turning to advisors to get a perspective as to what it is they should be doing with their money. Whereas now, the access people have to information means that people think, if I have access to a get-rich-quick scheme, then I will be okay. There's so much information out there about various different types of investments, regulated, such as ISAs and pensions, but also unregulated, such as cryptocurrency and other sorts
How
of
often are
investments.
you asked about that, actually? That's really interesting.
From not too much from my older clients who've experienced and know what investments are. But from younger clients, I'd probably say 1 in 3 clients would probably ask about cryptocurrency. So there was a time where that was very, very common. And the reason that's a very dangerous thing, and I'm not talking about cryptocurrency per se, but just generally having access to investments and information, it means people have a false sense of security in terms of the knowledge they think they have, the information they think they have access to gives them a certain level of knowledge that they think they can navigate the financial planning space themselves, which is actually very dangerous because no one was taught about money in school. So you're not taught at school as to how you should manage your money, rightly or wrongly. That's a different subject. But therefore, if I was, I can have access to information about how to prevent a heart attack and how to stop a heart attack. I can Google that online. But it doesn't mean if I'm having a heart attack, I'm not going to call an ambulance. Similarly, with financial planning, the trouble is the trauma of suffering the wrong financial planning is not going to come until further down the line. You find out that you didn't have the right financial planning in place when you suffer a critical illness.
It's almost too late it's been bad financial planning, isn't it?
It's already happened. You find out you don't have enough money to retire when you're retired.
That happened to my parents. They sadly suffered critical illness and probably hadn't had the best financial planning. My dad didn't have any cover in place, and I was really young. I was maybe in my early teens at the time, and I always say to people, although their health, touch wood, both of them, their health is recovered, their finances still aren't where they could have been. So their finances are still never at that maximum level that it could have been if they'd had provisions in place. Hence why I now love doing this job and speaking to people like you and hearing people that are doing the right thing for their clients, because I would hate more of my mum and dad to be walking around, with the same sort of scenario. So that's why I think I love what you say about actually your duty of care and really getting those people to understand. Because that thing, when I speak to my mum and dad now and say, why did you not make that decision, or why did you make the decision to not have it? They're like, well, hindsight's a wonderful thing. Obviously, they'd love to have it, but they just didn't really understand. It was mainly like, well, you're taking this type of mortgage, you might need some of this, or, we can look at that slightly further down the line, and it was just never picked back up. So it was really, it's really great to hear that actually you take that time for each and every person sat in front of you and tailor it to them. That's great.
No, that's brilliant. In terms of those particular customers, would you say that's an opportunity to sell the value of your profession at that point in time, because customers are more likely to come armed with information that they've researched themselves?
Yes, to some degree. So I've been in the industry long enough to know that there's certain people you can convince if they're open-minded and they haven't made a decision.
Yeah, I'm with you.
So I have a personal criteria before I take on board clients. So my criteria is, because a client will have their own criteria as to what type of financial consultant or advisor or planner they would want to work with. But equally, as a financial consultant, I have my own criteria as to what type of client I think I would be able to help and work with.
That's so interesting. I haven't heard of that approach before.
Because I always say to be honest, I say this on the call when I speak to a lot of clients. I take on board clients who are open-minded, take their money seriously, and have long-term vision. Because if you're not open-minded, you're not open and receptive to my ideas. If you're open-minded but you don't take your money seriously, you're not going to make any commitment. And if you don't have any vision, you could make the first decision by listening, you could make the second decision by making the commitment, but you can't see where it's taking you, and therefore something
or they'll cancel
will change.
it and they'll lapse, or it won't.
Exactly, and then it's a waste of my time. So if there are people who aren't open-minded, they don't have vision, and they don't take their money seriously, then I'm not going to spend time with that client, because I'm not here to convince people to do things they don't feel they need to do. Because I'm not talking to children, I'm talking to grown adults. So I'm not here to manipulate people or convince people into doing things. If they think what they're doing is best, that's their life choice. And they can either do that themselves by finding information available on the internet, or they could find another advisor, or they could find a broker. A broker takes instruction. An advisor gives advice. I'm not a broker, I'm an advisor. And actually, to add to that, I'm an advisor that will unashamedly sell. Because when I sit down with clients, I'm not positioning it as something that they want to buy. I'm positioning it as something that I will sell them. And that's with all of the products that I put in front of clients. There's an element of, yes, they want to buy into investments and protection and savings plans to create a better future for themselves, and that's the element where they want to buy. But I'm always going to sell, because I'm always going to try and convince them to do more, because if I can sell them on why they should have more protection, put more money into their pension, save and invest more money, that's not coming to me. They're going to retire sooner, they're going to have a better retirement, and everything goes wrong, they're going to have a better cushion to fall back on.
I love that, because again, when we speak to advisors, sometimes advisors apologise for talking about these products. They feel that it is a hard sell, or the thing somebody doesn't want to speak about, forgetting that each one of these products benefits the client. It's only them that's going to be better off for it in the end if they've bothered to pay the premium or make the monthly investment towards it. So absolutely, it's having that. I'm not apologising for the conversation we're going to have, because you need to trust me that anything I put in place for you is going to make you better off. And that's totally true, isn't it?
It's just working for the right outcomes, isn't it?
Correct.
Yeah.
And it's interesting you use that word trust, because, before you come on to that point, whilst it's fresh in my mind, the criteria, I suggest what criteria a client should have, because I have my own criteria, and I might not verbalize that, but when I'm speaking to a client, I can detect whether they're open and serious and have vision. What I say to a client is, you have to like me and trust me and want me to help you. Because if you don't like me and trust me and want me to help, then you should find someone else to help.
Yeah, definitely.
That's
been
huge,
so insightful.
It's amazing.
Thanks. Yeah, that's been brilliant, Priyesh. I don't know if you had just, for rounding up, we've spoken about loads there, tons of top tips that advisors can take away. If you were to give one piece of advice to other advisors, what would it be?
To implement customer duty as a course of action naturally without it being forced upon you. So if you're looking at a client's situation, because if you've got long-standing clients and you can look at their situation, the way I always see it, whenever I'm meeting a client, it's my duty to make sure that I've taken some level of responsibility to make sure they're going to be better off from taking advice from me. So that means I have to look at what are the opportunities that these clients can exploit to make themselves better off, to enable them to live their best life and achieve their goals and have peace of mind. And what are the threats that would deny them those opportunities? So it's not only my opportunity to present them with those opportunities, it's also a responsibility to mitigate those threats. And if I'm only doing one but not the other, how have I served the client? Because it's built on straw. It's not built with strong foundations.
Absolutely love that. You know, as they go through life, there are things that are going to knock them off course, and they're those threats, aren't they?
Yeah.
Everything doesn't go to plan, right? So you have to plan for the expected
Life
as well as
doesn't go to
unexpected.
plan, does
Exactly.
it? You never know.
We all know that.
Thank you so much for your time, Priyesh. I've loved speaking to you. We loved working with you to do the kind of protection success research as well. You were absolutely brilliant.
Thank you so much.
Yeah,
Absolutely brilliant.
thank you very much for coming into head office now to speak to us more.
You're welcome. Thanks for having me.
Thanks very much.
Thank you.